I want to welcome everyone to today's webinar. I'm Ryan Fisher with CamaPlan, and we have Brett Dunlap, President of Yes Lending. He's going to tell us all about how merchant cash works. So let's get right into this. First, I want to say CamaPlan does not provide any investment advice or endorse anybody. We're basically here to give you educational information and to help you diversify your portfolio. We're basically a part of your team. We obviously want you to consult with your accountants, attorneys, or other professionals before making any investment. What is a self-directed IRA? Self-directed IRA basically lets you invest in anything that you want. There's a few things that you can invest in, and I'll go ahead and let you know what that is right now. I don't know why that did that. I apologize there. Hold on. The IRS never says what you can invest in, only what you cannot. It's pretty simple list, collectibles, and life insurance. So as long as it doesn't classify as that, then most likely you're able to use your IRA to invest in it. This is some of the most popular assets we see our clients investing in: real estate, precious metals, that's physical bullion stored in a depository, notes, mortgages, secured, unsecured, first, seconds, and private placements, and I'll let Brett get more into that. That's private funds, private companies, etc. I just want to illustrate this real quick and why people like using their retirement funds. So for example, if you had $50,000 in a Roth IRA, a traditional IRA, and you personally, and this chart's done with a 10% return. The green one is the Roth there. The middle one is a tax-deferred account, such as a traditional IRA, and the light purple would be you personally with a 10% return and a 30% tax bracket. You'll notice that with that same investment, you'll end up with 2.2 in your Roth IRA. Now, you'll end up with 2.2 in your traditional IRA as well, but when you take that money out, you have to pay the taxes. So you end up with 1.5 in a tax-deferred type environment. Now, same investment, same return, but you had to pay the taxes. You personally would end up with 748. So you'll see that, you know, to help grow your wealth, it's really important to use these tools and the tax breaks that you can get. It's going to be a lot easier to grow your wealth in a tax-free or tax-deferred environment. If you have any questions on this, I can help answer that for you, but we won't get into all the details today. Why do you need us? Basically, the IRS says you have to have an authorized party to hold your retirement funds. We're a neutral third party. Again, we don't give you any investment advice. We don't sell any products. We encourage you to do all your own due diligence and, you know, pick your investments wisely. This is my contact information. If you have any questions, please reach out to me. I'll help answer any questions you have about using your IRA or 401k to do alternative investments. R. Fisher, Fischer, at CamaPlan.com. That's CamaPlan.com. At this point, I'll go ahead and turn it over to Brett. And Brett's gonna, you should get your screen there, Brett.
Okay, do you see my screen?
There we go, it's coming up. I want to welcome you, Brett. Thanks for being here today and providing us with the information that you're going to moving forward. I want to start with, why don't you tell us a little bit about yourself and why you like this and how you got into it?
Okay. All right. Thank you, Ryan. Thank you for allowing me the opportunity to present before your CamaPlan investors who use your self-directed IRA services. My background really has been a serial entrepreneur for the last 27 years. I have formed, operated, and sold 4 different companies over the course of these 27 years. I just completed my 3-year employment agreement with the last company who acquired my mobile technology company. So I really have had a very much intrigue and interest around small businesses and all the things that are involved in getting a business from the conceptual stage to the execution stage to ultimately realizing value for the shareholders and the investors in the business. So what really kind of brought my attention to the concept and to the industry that YesLender is involved with, which is called the merchant cash advance space, is the fact that what we're doing is we're helping small businesses basically finance their working capital and their business in general, and to, for whatever reason, for whatever purposes they may have for those funds, whether it's expansion, whether it's for marketing dollars, working capital, so forth and so on. So I've always, my interests over the years have always been aligned and identified with small business owners. And when I saw the opportunity to become what we call an alternative lender or a private lender to small businesses, I jumped at it. So I started at YesLender as an investor. I was just a passive investor while I was working off that 3-year employment arrangement with the last company who acquired my firm. And then as I was kind of watching what was unfolding and how the business operated and the major players within the industry, I saw that this is something that I believed in, and I thought I could do a really good job, not only for myself and the investors who invest with us, but also for the underlying clients, which are small business owners. So just recently, I bought out my other 2 partners, so I really kind of tripled down on this, and now I own 100% of YesLender, and I'm very, very excited about the future opportunity for YesLender and for the business of small business lending. Ryan, do you have any other questions, or do you want me to just move on?
No, go ahead.
Presentation.
Go ahead and move on. Everybody's also welcome to type in any questions in the chat box. We'll go ahead and answer those throughout the presentation or at the end, but feel free to use that, and we'll address those first.
Okay. Okay. This presentation of mine, it's about, I think, 13 slides. It should take no more than 20 minutes, so we have plenty of time for question and answer, which is really where I want to get to. But in the meantime, I want to share with you our story and give you a little insight and appreciation for the business of YesLender and what we do. Okay. So the company was founded really in 2015. So we've been around for a little over 2 years now. And as mentioned before, we provide small businesses with what we call cash advances or loans to help them grow. And to date, we've facilitated over $4 million in business fundings to small businesses. That has been over 87 transactions in 18 different industries. So we really are not limited by geography, and we're really not limited by industry. And the niche here, and one of the things that caught my attention to this, the business of merchant cash advance lending, really is that we're kind of disintermediating or taking business from, the traditional lenders, the banks and the credit unions. If you're a small business person and you've ever tried to get submit a loan application and get money from a traditional lender such as a bank, I think you'll find that it's difficult. It's very tough, and they require personal guarantees, and it has to be a certain dollar amount size to make it even worth their while, and their approval rate is very low. So there was definitely an opportunity for the private sector to step in, especially after the financial crisis, which is when the merchant cash advance industry was spawned, where private lenders stepped in where the traditional lenders stepped out to basically meet the need of small businesses and provide them with the necessary capital. So how big is this opportunity? There's 28 million small businesses in the U.S. There's actually 42 million registered small businesses, but in terms of businesses identified as candidates for our services, the universe is about 28 million. And according to a recent statistic, there's an unmet demand by small businesses of between 80 to 120 billion dollars. Just basically looking for funding for lines of credit. And what's interesting is that since the financial crisis, if it wasn't bad enough back then, the traditional banks are actually loaning even fewer dollars and approving fewer loans to the small businesses. So it's a very interesting phenomena that has taken place, which again has created the opportunity for private lenders or alternative lenders such as Yes Lender to step in where the banks have stepped out and to meet that need from small businesses. So we're filling the void. So why would a small business want to do business with us? Well, for one thing, we make the process simple and easy. It's a one-page online application that they complete. It should not take very long at all. We do not ask for any profit and loss statements. We don't ask for balance sheets. No, but rather what we do is we look at the cash flow of that business. That's where we're most focused on. We want to make certain this business has the wherewithal to make the daily payment to Yes Lender over the course or term of that particular funding. So we make these decisions within really 24 to 48 hours. So we don't mess them about. We get the information from them, we review it, we have a very disciplined underwriting process, which I'll share with you in a minute, but we give them back an answer, yes or no. And we give them the opportunity to have flexible payments. They can do what we call an ACH withdrawal that comes right out of their bank account, or we can take a percentage of their credit card transactions every day. So one of the things that caught my eye about the business is the great cash flow that it generates for companies like Yes Lender. So here's how it works: is if I'm a business and I apply to Yes Lender for a $10,000 loan, and Yes Lender approves me, I'm going to start paying Yes Lender back the next day through what we call either an ACH debit, where we're going to go into your bank account, that business's bank account, and withdraw a prorated amount on every business day of the month. So there's 21 business days in a month. So every business day we're going in, we're taking a prorated amount from that merchant right out of their bank account. Or alternatively, we'll do what we call a credit card split. And that example then, instead of doing an ACH withdrawal from the bank account, we'll take a percentage of their credit card transactions for that particular day. Usually the rev share is about usually 85-15, sometimes 80-20. So we'll take 15% of the day's credit card receipts, and that's how we get paid on a daily basis. One of the keys to this business is, you're looking for lead gen. You want high quality leads. And the leads, the demand for this service is just enormous. And as I tell friends of mine who look into this business, don't worry about the lead gen side of things. That's the least of your worries, because there's such a high demand from small businesses for these types of services that we really have the ability to kind of be choosy and picky as to who we decide we want to lend to and who we don't want to lend to. But like anything in the lending business, you really need a developed and disciplined underwriting process, which I believe we have in place, and we're always improving on it all the time. So our type of advances that we give out to small businesses range from $20,000 to $100,000. That's our sweet spot. But we've been currently trending at around $27,000 on average. So we're on the low end of that range. Our funding terms will go anywhere from 4 to 12 months. We always want to stay under 12 months. We've never exceeded 12 months. Our average duration for an advance is 7 months. And as mentioned before, the way we most of the times get paid is through an automated clearinghouse or ACH debit, where we go right into the client's business bank account, and we take a prorated amount every business day. The other way is through what we call the credit card split. Our average factor rate is 1.38, and I'm going to get into that in a minute. And what's also interesting, and this is what I was mentioning in the previous slide in terms of lead gen, today we receive 5 to 7 applications every day. For example, this morning already I have 3 that have hit my inbox. And of those applications we get every day, we fund 1 in every 20 to 25 applications. So it's a great position right now to be in. There's enormous demand for this, and therefore we can be very selective in who we choose to fund and who we choose not to. So how does our model work? It really does start and end with our underwriting. We need to be very discerning as to who we choose to do business with and who not to. But we, again, do not ask for a balance sheet or a P&L from the business, but rather we ask for bank statements. We want bank statements for starters the last 4 months, and before we pull the trigger and lend money out, we'll ask for statements over the past 12 months. So we look at banking activity, and we're in particular looking at cash flow. We want to see, are they bouncing checks? Are they overdrafting? Do they have negative days? How are they spending their money? If it's a construction company, are they spending their money at Home Depot and Lowe's? Or, do we see jewelry or cruises or something like that? Who's taking their business very serious and who's not? We actually have a company that will do an on-site inspection. They'll take pictures of the signage, the exterior of the building, and the interior of the business establishment, and they'll do a cursory interview of the merchant. We've sourced a company that if we contact them by 11 o'clock before the end of the day, anywhere in continental United States, they can be on site. Amazing. We do a Secretary of State registrar check, make certain the company is in good standing with the state in which they're registered. We also look at industry databases such as UCC filings, if there's any other merchant cash advance companies that may have a current outstanding loan with this particular merchant. We do background checks, criminal background checks. We do customer reviews. We do Google searches, just simple Google searches. You can learn a lot. We try to do all this within the first 24 to 48 hours. We have a very streamlined process to it. And I'm not going to get into a lot of detail here, but this is, the stages that we step the merchant through. First, we qualify the merchant. Once we get the application in, make certain that, just eyeballing their bank cash flow, that they're in our box in terms of our lending box. And if it gets through that initial phase, then we'll start pulling credit checks through Equifax. We'll do a credit report on the owner. We'll do a business identity report, a failure risk rating report, a credit risk score report. Equifax is a very strategic partner of ours. And Equifax, as many of you know, is one of the big 3 credit reporting agencies. And then when it gets through that underwriting process and the underwriter has said, yes, this has met our requirements, it will go to a final committee review, and we'll review it one more time, a new set of eyes, on those documents. And then from there, we'll go to the document finalization, onboarding, and post-funding. These are just some of the industries that we have funded. You can see these are small businesses, bakeries, pizza shops, some small manufacturing companies, so forth and so on. You can see here that we have a big gray wedge here. That's concrete. We have really kind of made a little niche for ourselves with concrete companies. They're great payers, great cash flows, consistent, reliable customer base. Love these guys. Never miss a payment. We really have kind of carved out a nice little niche for ourselves in that particular area. So these are examples of the yes lender type loans, and this is where I'm going to get into the factor. So here, these are actual funding amounts that we've done for these 3 different amounts. So let's just take the first one here. We funded $5,605 at a 1.49 factor. So what that means is that this particular merchant is going to pay yes lender over the course of these 3.5 months. They're going to pay us a total of $8,940. And they're going to do that through an ACH debit by paying us $127.71 every business day over the next 3.5 months, or 70 business days. So this is a 1.49 factor on 5605, which results in a profit to us of $29.40. This is a 59% rate of return in 3.5 months. Here's one for $28,500 at a factor of 1.35, and here's one at a factor of 1.44. So you can see the beauty of this industry. It's compounding on top of compounding, because when we're lending out, for example, at a factor of 1.44, and we're getting paid back, over the course of 150 business days or 7 months, we're receiving money back every day. So we don't have to wait 7 months before we're whole. If you do the math here, we're whole probably by the end of month 4, we've recovered our entire principal, and we can get that money back on the street in the form of another advance that might be at a 1.4 or 1.44 factor rate. And that's the compounding on compounding. So just another hypothetical example, you can take $30,000 that we initially fund. The payback is going to be $42,000 over a term of 84 business days, which is roughly 4 months. So that $30,000 is going to turn into $42,000. We lend $42,000, and that turns into $58,800. The $58,800 on the third round of funding results in $82,320. So you can see how $30,000 compounds very quickly to as much as $82,000 under these terms. So as far as the investor promissory note, we will provide you with 2 things. One is a promissory note. Minimum capital investment is $25,000. We'll pay you either a rate of 12.5% if you choose to have quarterly distributions to you, or 15% if you choose to have an annual distribution. The length of the agreement is only 1 year. You can redeem it within 90 days notice of the anniversary date. If you want to redeem it, that's fine as well. So it's a very simple, straightforward opportunity here for investors. It's a promissory note, straight debt, that we're going to pay you anywhere from 12.5% to 15% with a minimum 1-year lockup. And also with that, you will get a security agreement, and that security agreement will be your note will be securitized by the assets of Yes Lender, which is essentially our loan portfolio and our accounts receivable. And you will come before any founder's money. So you will have priority over any founders. So there you have it. That is the investment opportunity. It's alternative. This would be considered an alternative investment. And I think it's a very exciting industry, and I'd love to have you on board and to do well for you. Ryan?
Great. Thanks, Brett. Had a question for you. Have you ever had somebody not pay or not be able to get your payment that you were promised each day?
Yes. As luck would have it, let me just take a step back and tell you the quick evolution. So when I was a passive investor back in early 2015, I told my partners, I said, listen, before we start lending our own money, let's learn this industry, and let's find out who are the players, how they underwrite, and how they conduct business in general. So we were essentially a matchmaker. We were matching up borrowers to lenders and getting paid a one-off commission. So that went on all through 2015. We did well for ourselves, and then in the beginning of 2016, we did an analysis of the 20-some loans that we facilitated, that we got paid a one-off commission, and we did an analysis to determine how they worked out. And we got paid our commission up front. But, I was curious, we went back to the lender and asked them, hey, did this thing work out? Did the guy pay? Did they stiff you? What happened? And what we found, out of 23 loans, 1 went bad, 2 were a little shaky, and the rest of them were good. So we thought we did well when we got paid 10% of the funded amount, but wow, the lenders really did well when they were lending money out at factors of 1.35 to 1.45. So in March of 2016, we said, let's get into the direct lending side of things. So we started small, and as luck would have it, our very first loan went bad on the Pike Steakhouse in Cincinnati, Ohio. But bad is kind of a relative term. They paid back about 50% of the principal, and then they literally just went under. So that was one time we got stung. And yes, I'll be very open, full disclosure. We got defrauded once. This is before we had site inspections and before we had a relationship with our credit service bureau. And someone within 2 weeks of funding just went under. And we found out later, after we implemented our site inspection and we did some credit checks, that he was a fraudster. So we've taken, a couple licks, and I think that's helped us, and we've improved, and we've gotten better for it. So our default rate, by the way, I didn't mention this, I should have, is right now 8%. The industry default rate is 12 to 15%. I think that 8% can come down even lower, but that's what we're currently running at today.
How does that affect an investor if something goes bad?
Right. So we would have to really, really mess up for things to go bad for investors. I estimate the break-even default rate to be somewhere around close to 30%, probably around 28%. So over 1 in 4 loans have got to go bad for that to happen, or in terms of dollar amounts lent out. But keep in mind that money comes back so fast that we recoup our principal pretty rapidly, and it's usually somewhere in the neighborhood of about 60% of the way in there of the loan repayment that we're completely whole. Now we're free rolling, and then if there's any default, it's just lost opportunity. So in terms of investors, our overhead is very, very tight. I'm an experienced entrepreneur. Every business I've ever operated has been cash flow positive, and yes, lender is going to be no exception to that rule for sure. And we are very, very careful and disciplined with our underwriting process, and we have to look out for not only our investors but also ourselves as the founders, because we have a lot of money, our own money in this as well.
Great, thanks for answering that. I have another question here. Does someone have to be, what are the requirements for an investor? Do you have to be accredited or not, investment background, etc.?
No, we do not require you to be an accredited investor. You don't need a background in investing either.
Okay, great. Do you have a slide with your contact information there, Brett?
Yes, sorry.
Let's go ahead and put that up. I don't see any other questions that came in. Let me just double check here. That seemed pretty clean and clear on how the merchant cash works. I appreciate you letting us, giving us your insight on that. And if anybody has any questions regarding using their IRAs, please contact me. Again, Ryan Fisher at CamaPlan. You can visit our website, CamaPlan.com. You can schedule a phone consultation there or call the office and we'll help you get set up. Brett's information is on the screen, but let me ask you another quick question here. It just came in. Is there a minimum that you require when lending, Brett?
Yes. We, as you saw, we did a loan around $5,000. That's early on. We were just trying to get our feet wet and better understand the business. Today, we're not going to do anything under $10,000. And that will probably jump up to $15,000 within the next few months. So that's where we are today.
IRAs or personal, etc.
Well, I'm sorry. This was to lending to merchants. Lending to merchants. As far as minimum investment. As an investor. Oh, as an investor, the minimum amount's $25,000.
Okay, great, got it. But that's good to know both. So, in general, when you're lending to a business, you're not looking to do less than 10.
Correct.
at the moment, and that's going to go up. Okay, great. Well, if you guys have any other questions for Brett, please contact him, 610-952-1702, or brettd@yeslender.com. I appreciate everybody for getting on today, and I'm sure we'll see Brett again in the future. Thanks for joining us today, Brett.
Thank you, Ryan, and thank you, everybody, for listening.
Thank you. Bye-bye.
Bye-bye.